The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
And welcome to another edition of the wonderfully soft and squeezable Dave White's Power Trading Hour. And I guess we're going to probably have a little fun, brought to you by Tylenol 4 and my knee surgery. So we'll be having a good time today. And, I'm sure that no jury would convict me if I say something wrong. Anyway, we're going to have a good day out here and a fun day. It's certainly a beautiful day at the headquarters of Technical Trading and Investing, TFNN.com. We also wanted to remind you that the Tiger Dollar special is starting and getting ready to expire. So what do we need you to do? We need you to go to that front page of TFNN and sign up for some Tiger Dollars. And, of course, I don't know what you'll be doing this weekend. I think it goes till Monday. Is that correct? Nod? This weekend? The close of today? Through the weekend. Okay, I just wanted to make sure. So we're going to have these Tiger Dollars. I don't know what you're going to do. I don't know if you're going to turn on the water, feel that cold water rush across your hand, or flip a light switch, and you're going to think, now's the time. I need to go and sign up for those Tiger Dollars right now. I'm not going to wait any longer. I'm not going to put it off. I'm not going to curse the darkness. I'm going to light a candle and sign up for some Tiger Dollars. So hopefully everybody will think of that. It's the best way to make some money on a market that's not moving very fast right now. You can go, 20%, something like that. Anyway, go to the front page of TFNN.com and we'll get some Tiger Dollars there. Of course, the introductory of pricing on the art of timing the trade charts is getting ready to phase out. So you want to make sure and get your Tiger Dollar money so that you can get your art of timing the trade charts out. So what else do we have going on? Markets tried to go up, it's tried to go down. Not a lot of volume, just clearing 2 billion shares on the consolidated New York Stock Exchange tape. We do have, we're off 3 points on the S&P cash on 2 billion shares. So a very light day, tried to get up to 1658, almost 1659. We've been as low as 1647 on the S&P cash. But the bias has been, and pretty much on the closes has been, to push this market down a little. Now, if this was just a regular day, probably not a big deal. But we are in the last 2 or 3 days of the month. We've only got, I would say, normally when it hits, or the first hits like this, almost all the fun buying is over by the 31st. Of course, you need to be, if you're a fund manager, long the last 3 days of the month, first 2 days of the month, 100% invested. If you're in technology, you've got to buy all your technology. That we aren't getting a serious bump out of here should at least sound at least a minor warning bell, even if you're the most bullish of bulls. I, of course, have my bear here. The thing I would always worry about, and I'm wondering how we close out here, because my thought would be, what happens if we get another 5%, 7%, 10% move down in Japan? Will that actually start moving our market down and showing fear? We've had the bubble burst there, and 10% in a week, something like that. Move in Japan's market. Would it be so surprising to see something similar happen here? Everybody's starting to get a little bit afraid that the morphine drip of money that Ben Bernanke has dropped on the market for the last couple of years may start to be tapered. And of course, like all heroin addicts, no one wants to hear less. They only want to hear more. Oh, I love that AT&T commercial, by the way. I should get the drop of that so I could play it back. We want more. We want more. Well, of course, the market wants more, and I think Ben has been telegraphing that you're going to get less. I think he's well aware of the bubble in Japan and suspects that we have a similar bubble here. I think we could go back to 1575 in a couple of days. I mean, over a couple of days. Whenever this thing cracks, I have a feeling it's going to be short, unsweet, and scary, and be over fairly quickly. But I'm looking for something like 1575 as the first step down lower. Then we'll see whether or not this is just going to be a pullback and or a top in the market. Other things that are kind of interesting, starting to see UNG, natural gas, starting to roll over. That's fairly natural in the summer. We've probably got about 6 weeks where we're going to see natural gas organically be lower, just because there's not a lot of reasons to have it. We haven't hit the heights of the summer, and of course pretty much all the cold weather is over. No real news yet on additional pipelines to carry natural gas to expand the market. Probably the most interesting IPOs I saw last fall were companies that were going to be building liquefaction. I can't even say it now, liquefying of natural gas to start shipping it across the world. When we start seeing those ships roll out, I suspect we're going to get a much bigger floor, and maybe that'll be enough to move natural gas out of this lower trading range from what, 18 to 24 bucks, something like that. But I'd like to see this thing come back in, I don't know, July, be real lethargic around 18, and maybe that will be the buy of the century. But I think we've got a fairly decent setup to go much higher in natural gas, but it's going to take some patience, just like a lot of other things out here. Of course, I was commenting in the Den a couple of days ago that I thought a lot of the recent action in gold had to do with options in gold expiring and kind of a supply and demand thing. We're seeing gold down today. What is that? To find it here. Platinum, gold, what is that? Yeah, it's off 19 bucks. Of course, we are on a new contract on gold. I think that what we had was kind of just a little mini squeeze out here based on kind of commitment of traders and just the markets. So I think we got our one little bounce. We're probably going to go back down to the 1350 level on gold here, I would suspect, the first part of next week. When we do that, we're probably going to get a test, and that would be the test that I suspect would be the point to start buying both gold and gold equities if you get a nice low volume test of the low. It could certainly roll right through that and maybe even get an intraday spike down to 1250, something like that. I'd love to see a $100 move in gold and have everybody freak out. I probably at that point would start thinking about buying calls on gold miners and gold and try to get at least some options, not expiration. I've just got to get some options plays out there on gold, and those we might be getting that spike. And I suspect again we're going to go into a weekend, and you know, we've seen Japan basically give up all the BS story bounce of them putting all the retirees' money into the stock market. I didn't think that that would last more than a day. It did not, as far as the story of always moving these markets. But what can you say? Other things in the news out here, we had a GPS, which is Gap Store. Let me that GPS. Sorry about that. And what else we have here? Now this thing's having a nice bounce up here. Trying target raised. Of course, they had some good news from earnings. Not a lot of volume back up here, but you want to watch the May 21st high at 41.86 and see how that is tested over the next few days. Netflix up a little bit, 2%. Again, we're going to be watching this one closely. I suspect this is going to be one of the shorts of all time. It's not quite ready yet. I would love to see, it's got two major gap ups in this. I'd love to see one more major gap up and maybe a short squeeze, and that might be the end of it there. I'd be reticent to pull the trigger right here, but need either a test to the top again at 248.85. Of course, they've been on a pretty much a down trail since they released the new season of Arrested Development. Mostly because people didn't think that it was that good. And the perception that I've talked about of some of these stocks going from technology to being entertainment and content stocks, which have traditionally a much lower multiple. And I think that the problem is, even though Netflix wants to say, we've got some special stuff if you come over and watch us, the problem is, are they a content company? And what happens when these things blow apart, when they spend a lot of money on something that turns out to be a little smelly, if I could put it the right way. AIG's off 2.5%. And not a big deal, just a little gap down here today. This thing's been rolling fairly well since kind of getting out of the government hands, which is the theme of a lot of these stocks. GES, a beat. It's up 10%. So we'll take a look at that, which is Guess, of course, another gene company in retail. A nice bounce out here. This thing is going up against a massive move down, so that you're in this gap area, but you're going to probably find a lot of resistance not too much farther up. This thing came down on 13 million shares on August 23rd. We are up back into this gap at about 4 million shares so far today. I think you probably have enough momentum to go retest this last August 22nd high of 2012 at 34.10. But you're going to need a lot of juice for this thing not to pull back fairly quickly. There are movers out here. A nice move. LGF. We'll take a look at. Did I put it in there? LGF? Yes, I did. Okay. We got another one out here. Yeah, it's not that big a deal, I guess. Lionsgate Entertainment, again, another lower multiple stock because it's thought of as a content company. Pretty easy to make a bad movie out there. Volume is picking up a little bit. Probably looking at receipts at the box office. Didn't like them that well. Anyway, we'll be back in a minute. You can always give me a call, 877-927-6648, 877-927-6648.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. I don't have the full news, but thanks for Angie and the Den bringing it up. A week ago on Friday, we had our friend from Nanex in, and we were talking about this issue, the plan to basically have circuit breakers in effect the entire trading day from 9:30 to 4 o'clock was supposed to start in August. And I will have to look and find what the total details, but apparently the New York Stock Exchange may be pushing that ahead a little bit and may be going on and taking effect next Thursday. It'll be very interesting because, of course, our guest who works on this stuff all day long and looks for patterns based on high-frequency trading was very shocked to think that it would work or work well. Well, I guess we're going to start knowing next week. My guess is that maybe someone thinks that the market's headed down, and they want to make sure that, especially with Japan's market moving as fast as it is, that they will go ahead and shove this in now. That would be telling me that at least some people are starting to fear a rug pull out of this marketplace by something like another big move out of the Japanese market, or maybe some other Asian market, or maybe even Europe. Maybe some bad news is coming that they already want to start putting in some insurance in about, but I'll try to read up about that during the next break. We've got Palo Alto Networks that came out with earnings last night. This is a company that I loved and I wanted to buy, but the problem was it was one of these super thin traded stocks, and that was, it took off like a rocket. It was another one that had like a 5 or 10% of the float actually tradable as it went IPO, and this thing rocketed up from, I think, an offering price of $30 to open up in the 50s, went up to $72, and we've seen, pretty much in the 6-month lockup period, the lows in the stock. It did have a small bounce back into March of March and April, but it's been selling off fairly strongly. Of course, down on monstrous volume. Looks like it's going to break out the bottom here. Not a bad company, and one that I'm probably going to start covering in the Tech Insider now that we're getting a little bit of action. If this thing could float out, might not be a bad play out here, but it's going to take a while, and a lot of these stocks, when I do start talking about them, might be 6 to 9 months actually before we get a chance to go through them. Ubiquity Networks was one like that. This thing is finally getting to me. Maybe I can find it here. Ubiquity Net, UBNT. There's another company that it was a great company, but suffered from a lot of other issues. This thing did have a nice little bottom out here. I'd love for this thing to come back and fill this gap. These folks make basically routers and ways to extend networks with Wi-Fi. And little boxes are about $100. Great profit margin on them. Nobody really competing with them to any huge extent. But making a lot of bridge routers, wireless bridge routers. If you've got a huge warehouse or something, you want to give internet to all your workers out there so that they can get their orders and fill them like at a Amazon warehouse. You put these little things up, and boy, you've got an entire wireless network that'll cover acres. And in fact, I had one that got my internet when I lived up north that ran 1.5 miles over a lake. So not a bad thing, but again, a great company. Unfortunately, they had some news that was apparently false, since it's been 6 months since everybody cried out that the guy was somehow in bed with the mob, and there were a bunch of really strange rumors in this company. So I just stayed away too long and missed the original bounce off the bottoms. But this is probably more of the pattern I'm looking for Pan Network. Is it? What was it? Yeah. What is it? Yeah. Palo Alto Networks, excuse me. And not a bad looking pattern out here. But kind of the same thing. This thing might find the same kind of pattern setting up over the summer. Good company, nothing I really hate. They are guiding down, so we might have a couple of quarters out here, but a lot of these are not a bad looking plays if you can find them out there. This one had a great signal. I just missed it. UBNT you might put on your watch list again. We'll be back in a minute.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Anyway, we're going to get to some stocks that look like they were making some decent signals. And kind of let's update are we really? Oh, boy. Market's starting to roll over fairly hard. I suspected we'd be down about 10 points this morning. We got that little bounce, which was a little weird. And, yeah, have to see. It got, is this going on? There we go. Just waiting for everything. Yeah, still, off 7 points on the S&P cash, 2.2 billion shares on the consolidated New York Stock Exchange tape. Not a whole lot. We're seeing a few stocks roll over here, but just a very light into a shortened week. And I think Monday is probably going to give us a much better look at what we're doing in this market. To see if there was anything else moving out here. Well, actually, give me just a second. I was trying to find the news about the New York Stock Exchange, but I didn't see it on any of my listings. So we'll figure out what else is going on to see if we have any other big movers out here. Nuon, Symmetric, see if we have any big poppers on the, all within kind of the margin of interest. Really not a lot moving here. So we'll look at Arkansas's best. This one had coming up, of course, the transportation company. I've been waiting for it to kind of come this and test this gap down that started the long road down for it on the, what was that, April 9th of 2012. It gapped down, but there was kind of a nice normal level for this thing to come back into it with. And what we really see is it did take off on May 6th out here with some decent volume. Has been running up, but this has really been rolling and running out of steam over the last few days as it's gone back and hit that long-term gap at $19.56. So not a lot going on there. COF, which is Capital One Financial, this thing is bucking up against its previous high. Volume is just a little lighter, not significantly lighter. The January 7th high out here, $62.92, 6.4 million shares. Got it with 5.8 million shares, which would make me think that you're going to at least tag it one more time up here at Capital Financial One. HPQ looked like this thing was running on fumes. It had broken through its April 1st high, $24.05. That had 25 million shares. Basically came through it with just a ton of bricks on the 23rd of May out here, but really just has been kind of light in area over the last few days. I'm just wondering if this thing will close back below that 24.05, which would pretty much signal a probably a false breakout. But again, a lot of these stocks have very high short interest, and that would be interesting. Another one looking like it's ready to make a top, and that is Michael Kors. This thing had some nice volume up on earnings, but when it gets up to the $65 level, the volume just falls out, actually pulling back into that area today. KORS, of course, the manufacturer of fine leather goods, had its February 19th high at $65.10, 20 million shares, and we went up against it with 6.6 million shares yesterday. Not surprising, this thing pulled right back in to the trading range before. Rackspace Holdings, this is another one that's kind of blown apart. And I probably should have shorted it, but I didn't. It's one of these things where I didn't connect all the dots back together. But probably the worst part about Rackspace Hosting was how aggressive Amazon is getting in on its cloud services. In fact, I was just going through it last night and seeing what packages Amazon had to host something that we're working on here at TFNN. So we were looking at prices and everything, and maybe it's a little bit more for Amazon than kind of your no-name hosting company out here. But it wasn't that much more. I thought it would be a great deal more, especially with the services. So Amazon, pretty darn cheap. Going to be kind of tough for Rackspace to make a lot of margin. And of course, no one cares if Amazon doesn't make money. They haven't made money for 10 years. But Rackspace hosting, a much different story, and I think really seeing a lot of pressure put back on them. Over the last day or so here, we might be finding some kind of a floor, though, on RAX, so keep an eye on that. UNH, which is a United Healthcare Group. Let's go back and look at these. This is one that certainly looks rather toppy itself. UNH is the symbol. You had a nice, huge spike and a doji that set the high on April 2nd. With 22 million shares, $63.95. We've gone almost a buck higher than that. The May 30th high yesterday was $64.90 with 5.6 million shares. We get a close right here would be a nice sell signal saying that this thing really looks like it's topped out. XLK is one of those that we've been talking about. It's the technology sector. Looks like this thing may be putting together one of those double repo patterns. It's been pretty good so far, but you need just a close lower out here. If you get that on Monday, you would have almost one of those perfect double repo patterns from Joe DiNapoli. I'm using actually a 9-day average, but you can also, or his original thing was a displaced moving average, the 3x3. Not going to be much different but the one thing his does is project numbers out into the future, which is one of the nicest things that you can do. This pattern called the double repo, if you look it up, might find it on the internet, but it's basically 10 or 15 days above a 3x3 displaced moving average, a couple days below it, a couple more days above it, and then a close back below it. And that is one of the most powerful patterns, much less adding volume back into it. And we'll have to see what we have over the next few days. But this is, if you're looking for topping patterns in the marketplace, this is one of the best ones. Just a huge run, a little pullback, little pop, not a lot of volume, and then the turn right back down under that moving average is one of the better signals out here. Again, you can give me a call, 877-927-6648, 877-927-6648. And we have a call in the den for the XLP and consumer staples. A little less, but kind of the same thing, a little closer to the moving average in there, but yeah, you've got a fairly decent breakout here. Volume has picked up on consumer staples, which is the XLP. So let's see what we have out here for retracements. Let me see. Give me just a second here. And what do we got? Okay, I'm having technical. There we go. I just wanted to get back going. So what do we? Oh, was it XLP? Yeah. Let me go back to that XLP, computer problems. There we go. Okay. Yeah. Not exactly sure why I'm not getting. Got some kind of error going on here. Yeah. We'll take a look at that. Yeah. Looking good. Well, I won't get too tied up in that. Again, you can give me a call, 877-927-6648. We'll probably look at a few Gartley patterns. Of course, if you've been hiding under a rock, you wouldn't know that we've got Gartley patterns out here. But certainly we are seeing those in the art of timing the trade charts. Again, you're getting awful close to the end of the introductory pricing for it. So make sure you get your Tiger dollars and get a little discount setting that up. But 30-day money-back guarantee, so you can use it as you will. But anyway, we're going to look at some Gartley patterns. Some of the scans and some of the stocks that we've gotten from the scans. Nice little pop here for Air Lease Corporation. That was, the symbol was AL. This is one of the better looking Gartleys and exactly what you want to see if you're looking for a pop in a Gartley pattern. First of all, you get a fairly strong move up. And you pretty much get a about an 83% retracement. Sometimes you like to have just a little less than that, and you didn't quite get what you wanted on the downside target. But anywhere from about 70 to 85% is probably in the range of what you're going to get in these Gartleys for the retracement of the X to A leg. But volume really didn't pick up, and of course what you're getting today is exactly what you're looking for, which is a nice move on a volume in those. What else do we have? Yeah, got probably a little continuation of one in research in motion. Yeah, I'm not real pumped on this, but again, this thing's hugely short. I've been looking for this thing to come out of an asymmetrical triangle, and this would not be a bad pattern for this thing to pop maybe back up to the $16 range for the last time. We've got the Diamond Rock Hospitality, and looking at this one, another fine Gartley pattern. This is probably one of the stronger ones. You would still like to see this thing pull back just a little bit more down here to get a bullish Gartley pattern, but symmetry is fairly good. You've got very light volume in the C to D leg that we've just continued. That C point started on May 17th, got into the D point here today, but still need just a little bit more. We've got John from Sarasota. How you doing today, John?
Very good, thank you. How about yourself?
Well, with the miracles of chemistry, my knee doesn't seem to be near the problem it was after that Tylenol 4. So doing well, I think.
Good.
So what do you want to look at today? Ooh, wow, that's interesting. Go ahead.
HMA.
And that's health management. So we've got another one here on our list of these stocks up here that look rather interesting. This one, of course, had a lot of volume, Health Management Associates, but looks like it's trying to pull back in to the trading range out here. So what are you thinking about doing on this?
Well, I've thought about going short, but I'm not sure.
Well, I've got a theoretical objection to going short this, and that is that it's too easy to get blown out. Shorts can only go to 0, but on the opposite side, of course, this thing could go to 100. I normally, just playing the odds and over the years, won't short a stock that's $30 or less. For that reason, you rarely get stocks that double in price above 30 bucks. It is much more common below 30 bucks. So just the risk of waking up and finding some bogus news story and have them run all the shorts out of it is probably the reason I don't. The other thing is a high volume high here. You have a good chance of that actually getting retested on lighter volume, which is where, if I would short a $13 or $14 stock, probably where I would do it. Just too much volume today. I want to see a whole lot. I do like your target down here, which would probably be $10.20 with that high volume low. So I see what you're looking at, and I see the reaction and the false breakout today. But that would be the only thing I'd have against it, is I just do not try to short stocks below 30 bucks. Are there options available on this?
No. Well, you know, I have the charts for 30 days.
Yeah.
And so I'm trying to pick out, first of all, stocks that I might short or go long. And the first few days it was rather challenging, and then I started taking a new look and listening to you and Tom talking about it. So I might be doing a little bit better, but not sure.
Well, it's like anything out there. It takes some time to get good at, but certainly, you know, I see what you're looking at. I just don't like the light, high volume that we have today. And again, they do have options on this thing. Expire June 21st that aren't bad. They're like a buck. That would be normally when you start looking. Can you hang on through the break?
Yeah.
Okay. We'll be back in just a minute. But, you know, normally if I wanted to short a stock and it was fairly inexpensive, like a price in this one, $13 or $14 range, certainly you have to think about looking at the options out here. So we'll talk about those when we get back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll you'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Hey, we're talking with John from Sarasota. John, I want to ask you a couple questions. Have you read Tom O'Brien's book?
Well, I read, yes.
Okay.
I had back and review the chapter on the Gartley, and I've done that, and so then I had to go back again and read it again, and then I highlighted the particular phrases talked about the Gartley pattern.
Okay. Well, I mean, there are a lot of Gartley patterns out here in the marketplace. Let's go ahead and pick one that's probably a little bit better to show so that you really understand what you want to look for. McEwen Mining out here, okay? MUX, which is a symbol on that.
Okay, but one of the other questions I have on that pull-down stock list, what about the triple top box and the triple bottom box? How do I get those to give me triple tops and triple bottoms?
There's not always going to be ones in there. but I didn't check to see weather today. Where are they at? Triple top, triple bottom. Bottom 100 stop. Point and figure. Oh, the point and figure ones?
Yeah, just the same box, yeah.
You pretty much just click them, but there's not always going to be triple tops and triple bottoms out there.
Okay, right there, you had it.
Yeah, they're just not going to be. They're not going to be always. A lot of these scans, there's just not. There's always going to be stocks in the top, in the bottom 100, in the top 100, right? But some of these patterns aren't always going to be there.
Okay.
So if they just don't show up, maybe I'll put something in there that has a little pop-up box that says that they're just not available. There's none available right now. But there's always going to be ones for 52-week highs, 52-week lows, because there's always going to be stocks in that. But some of those triple tops and triple bottoms, especially when we're at the very highs of the market that haven't existed, for 10 years in some of these, there's just not going to be any triple tops. See what I'm saying?
Yes.
So some of these patterns will come and go, just like Gartley patterns. We're having an incredible load of them lately. Most of the time, there's only 2 or 3 out there in the marketplace in a day or in a couple of days. So it's just one of those things where, especially complicated patterns or patterns that can only happen rarely, you're not going to get them every day. Let me put it that way. Okay.
Okay. Gotcha.
So that would be it. But I was going to say, the ones that I want to look at when like McEwen Mining, MUX. I want to see a pattern like this if I want to go short. But of course, it's a $2 stock. But this is a good example of why I'm still kind of holding my dollars before buying any gold companies out here. There are some of these showing up in a lot of smaller gold companies. But this is exactly what you're looking at. A very strong move down, and if you're watching on Tiger TV, the April 5th high in MUX, you get a huge move down to the A point, and if you're looking at my power law vector indicator, you're going to see the ratio between that X to A and then the C to D is striking. So there is basically twice as much energy down in the X to A than there was in this last C to D move up. You've got pretty much the top of a bearish Gartley 222 all set up. So you've got a lot of the things we're looking for. You also have the B point coming in with 4.6 million shares. Yesterday we had, 2.8 million shares. So the thing is just going point by point by point through these to get the answer you're looking for. We're going to have to go to a break. I will be in the first hour of the Tom O'Brien Show. I want to thank John for calling in. Be back and be talking to you on Monday again. Same bat channel, same bat time. Thank you, John. See you in about an hour, everybody.